Hello and welcome to Fund to Money. Here we will be discussing balanced advantage funds or dynamic asset allocation funds, which are getting quite popular when the markets are volatile. People want to get the most out of equity investment. They want to continue getting growth without getting too badly affected, just in case things don't go right in the equity markets. So the idea behind balanced advantage funds or dynamic asset allocation funds is to keep getting the benefits of equity investment even while you contain the risks of which come from equity investments. Now, balanced advantage funds basically are hybrid funds, which basically means a mix of debt and equity. There could be other investments, asset class investments. In some balanced advantage fund or dynamic asset allocation funds also have real estate, a little bit of real estate exposure, which is like REITs and InvITs. So they do that, but they are primarily equity oriented hybrid funds, which means in the mix between debt and equity, they are typically there's more of equities, typically 65% or more, and that actually gives it a lot of advantages in terms of taxation, which we'll discuss later. But apart from equity and debt, and in some cases, some balanced advantage funds, as we mentioned, that they invest in real estate. There's also investments in derivatives. So there's a little bit of arbitrage investments that are done. So these are all ways by which you're containing the risk, and even as you keep getting benefits of equity investments, right? So for equity oriented hybrid funds, which balanced advantage funds are, 65% or more need to be invested in equities, domestically listed equities, which typically they do. But the interesting part about dynamic asset allocation funds is this, that the fund managers have the license to change the mix on a dynamic basis. It's not that unlike many other categories of hybrid funds where the mix is fixed. Here dynamically you can keep changing because the markets are volatile. So you're basically relying on the fund managers' expertise to take advantage of certain situations that are arising, and also the nimble-footedness, and of course also protect you from the dangers of that might just suddenly arise in one particular asset class. So this is also very different from another category of hybrid funds, which is multi-asset allocation funds, where you probably you need to invest in different even more asset classes, where at least in 3 asset classes you need to have an exposure of at least 10%. So multi-asset allocation fund is a different category. Here we're talking balanced advantage fund, where typically it's between equity and debt, and in some cases it's real estate. So when you're actually investing, you need to keep all this in mind. And so here we'll be discussing 2 particular areas. One is the how it works, and why it what are the salient features that might work for you, especially in times of volatile sort of markets, and where you want to keep getting the benefits of equity investments. So that's number 1. Number 2 are some of the applications of balanced advantage funds, how you can use them in your personal financial life. So we'll be discussing these 2 areas in the next section. We'll be coming back very shortly. Welcome back. Welcome to Fund to Money. We are discussing balanced advantage fund or dynamic asset allocation fund. As we mentioned, dynamically the asset allocation can be changed between equity and debt. In some cases there could be also arbitrage, and real estate in the form of REITs and InvITs. So that's how it is. Dynamically, the fund manager can change. Now, why does Balanced Advantage Fund? How could it possibly help investors during volatile markets? So the promise of a Balanced Advantage Fund is this. Basically, as an investor, as a lay investor, you can't be constantly tracking how markets are going to go. You can't be constantly living in the fear, what if the market corrects, what if all the gains that you have made you squander it or something like that, or you have made some gains and you don't lose them, or you want to keep you're enjoying the benefits of equity upturn, and you want to have an investment where if the market corrects, you still keep getting the advantages. This is where Balanced Advantage Fund can help, because what it is doing is the portion which is not non-equity, that is the portion which is making sure that your overall investment gets you a base level of return, even if things go a little haywire in the equities market. So that's what the net portion is doing. The arbitrage portion is also doing the same thing. The derivatives portion is doing the same thing. So what it does, it stabilizes the whole thing in a particular way. The good part is you don't have to track or time the market. You don't have to figure out when the market is going to drop and then you'll buy something, then when you're going to sell something. You don't have to time the market, you don't have to track the market. An expert is doing it for you. For fund manager has got expertise. They can make sure that when things are there's a lot of risk coming up, it's getting increased, they can make those maneuvers, because they're dynamically, they can change the asset allocation, so they can take care of the risk, and they can also make sure that you get the opportunities. So apart from managing the risk, it's trying to make sure that you get the best from each asset class, whether it's debt or equity, and you manage to make the most of it. Apart from this, what it also does is, in a portfolio of investment, it gives you that stability. You're getting growth, but at least a base level of growth, and which is from equities, and without taking taking a level of risk that might make you uncomfortable, right? Apart from that, it helps people who are new to investment, who may not have the expertise. Typically, an investor will not be able to have expertise in all asset classes. Fund managers have that benefit, and typically equity, what it does is equity, the gains that you make from equity investments, there's a provision that you can the features are such that you can preserve the gains. Also, the fact that rebalancing that you have to do, which we talked about, timing and tracking, that rebalancing is being done on its own. So basically what happens is, if things go wrong, you're making sure that, and things are getting wrong in equities and things are getting better in debt, then that rebalancing is being done by an expert. So all this actually is the promise of a Balanced Advantage Fund. You obviously have to choose the right one, a fund that's working for you, but that should work for you. So now let's talk about some of the features which are important, and that's where taxation comes in. If it's 65% or more in domestically listed securities, then it becomes an equity oriented hybrid fund. It's taxed like an equity investment or equity fund investment, which means for capital gains we make under 1 year, the units that are not 1 year old, you pay 15% short-term capital gains tax. For gains more than 1 year, they are considered long-term capital gains. Gains made under 1 year, short-term capital gains, you pay long-term capital gains tax only when the annual capital gains or annual long-term capital gains is more than 1 lakh. You pay 10% long-term capital gains tax. So this is something that you need to keep in mind, just in case. Typically, this is what you should be opting for: a fund which is an equity oriented, tends to be equity oriented hybrid fund, just in case it falls below. I mean, it's a fund. That's why you need to take a very good look at how the composition is between the different assets. So if you're buying it from anywhere, whether it's a brochure or material or information, you need to check how the composition is, because if it's going to be less than 65%, it's going to be taxed as a debt investment or debt fund, which means till 3 years the units, the gains, the capital gains that you make, will be treated as short-term capital gains, and there you have to pay short-term capital gains tax, which is your income tax rate. So it's as good as any other form of income. But if you make gains over 3 years, then it is seen as long-term capital gains. You get the benefit of inflation indexation, which means the cost of buying the unit gets enhanced in the same proportion as the movement in the inflation index, and you pay 20% long-term capital gains tax on that lower taxable long-term capital gains. So that benefit you enjoy, but that's not the reason why you should be buying a balanced advantage fund. It's primarily to get the advantage of equities. So that's what you should be looking at. Now, balanced advantage funds, they can play a very good role. Number one, they can be a stabilizing influence on your overall investment. They'll make sure that the investment, if pure equity oriented investment, they're suffering from market turbulence, this baseline growth, reasonably high growth, will help you make sure that the overall returns get a kicker and they stay at an elevated level. The rebalancing happens on its own, as I mentioned, and apart from that, what it can also do is, there could be goals which are about 5 to 8 years away. You can earmark a balanced advantage fund or a dynamic asset allocation fund for that purpose. It will get that growth which you'll need for something which is about 5 to 8 years away, and you can benefit from that, and the impact of inflation is nullified or sort of countered. Now, there are some other things that you could do if you're getting a large sum of money, say a severance pay or a bonus, or say one among the many retirement benefits, one of the retirement benefits which you don't need to spend right away, and maybe for 5 to 8 years you won't have to spend. You can put that money in balanced advantage fund, and then 5 to 8 years later you can start using the money. If you, in the interim, if you want regular income, then what you could do is you can wait for a year and then go for a systematic withdrawal plan, where a certain amount of money will come to you by liquidating units, but you will actually be, because the units are being liquidated, you'll be getting the long-term capital gains tax benefit out there, and that it's going to be a tax efficient regular income. Remember, now dividends are fully taxable in your hands, as a regular income source, they're probably not as attractive as they were in the past, right? So these are some of the things that you need to keep in mind when you're buying balanced advantage fund and dynamic asset allocation fund. Of course, like any other fund, you have to compare, see how the fund performance has been over 1, 3, and 5 years vis-a-vis benchmark and other peer sort of funds, and you should be there, good to go, and you should be home. So we hope you found this useful, how balanced advantage fund or dynamic asset allocation fund can help you counter any worries or actual situations of volatility. You don't have to worry about when the market is going to correct, what happens if the market goes up in a jagged sort of a movement. You don't have to worry about that. At least it gives you a little bit of a tool to counter. If it doesn't fully nullify that worry or the concern or that impact, it can at least gives you a tool to counter it. So we hope you found this useful. If you found it useful, hit the like button, share it with others, and subscribe to our channel. Wait for our next presentation. Till the next time, take very good care of yourself, and goodbye.